I was having some technical difficulties and I wanted to make sure that we got y'all up and running. All right. I wanted to make sure y'all were right. All right. So I know that Facebook is getting live. Let me make sure I click live on that so I know that the peoples are seeing it on Facebook group. If y'all aren't a part of the Six Figure Family Secrets community on Facebook, make sure you join that. All right, make sure you join that. That's the key right there. And then let's make sure that Instagram is up and running. And if y'all haven't joined the Famgram community on Instagram, make sure y'all join the Famgram community. All right, make sure y'all get started with that. That's important as well. You feel me? Like let's make sure that y'all locked and loaded. You know what I mean? So let's make sure that my peoples is back. There we go. Now we back and running. So y'all let me know if y'all can hear me. I know last time there was issues. So y'all let me know if y'all can hear me better now than y'all were before because I know that there was some issues with the audio, right? Let me see and make sure that y'all can hear me loud and clear because I want to make sure that y'all got me, right? So today, like I said, we're going to be talking about how to checkmate the IRS. All right? That's what we're going to be talking about today. And so, like I mentioned, we're going to checkmate the IRS by leveraging the 508c1a faith-based organizational trust. Okay? That's how we're going to be doing that. So I want to go ahead and make this. There we go. That's what I wanted. That's what I wanted. Okay. So this is how we're going to situate this, y'all. So, like I said, I typed in already what a 508c1a organizational trust is, just so that you all can check it out and you can see it. So, a faith based organizational trust is also referred to as a 508 or 508 trust. It's typically a type of religious organization that is automatically recognized as tax exempt under the 501c3 without needing to apply for the recognition. So, what does that mean? That means that when you have a 508c1a faith based organizational trust, you're pretty much a 501c3, but you don't have to apply for you don't have to go to the IRS and let them know that you're a 501c3. That's pretty much what a 508c1a is, right? Is a disregarded entity that allows you to operate as a charity, as a nonprofit, as a 501c3 without actually needing to register and tell the government that. So you're pretty much creating a private charity. Okay? You're creating a private charity. And you're like, "Well, Marcus, that sounds nice, but how is that relevant to me?" Right? So that's a great question. So how this is relevant to you, right? Is that when it comes to a 508c1a, right? When it comes to a 508c1a trust, what this means, what you're able to do is once you have let's say you have a family trust here. This is what we like to call the F.L.I.P formula, right? So the F.L.I.P formula means family legacy inheritance. I'm gonna put INH for short plan. Okay, so that stands for F.L.I.P, right? And so what we're doing is we're creating the F.L.I.P formula. So this is the 508 trust. Up under the 508 trust, you have the private family foundation or your charity of your choice, right? And so what I want you to understand is that you actually have two charities. You have a 508 that's a charity, and then you also have a private family foundation or another trust as a charity, right? And so what we're doing here is any income that comes from, let's say, an LLC. Let's say we make 100K this year. Of course, we're going to pass through that entity into the family trust. And let's say we have $50,000 of expenses on an annual basis. Well, that now leaves us with 50,000 in the family trust. But the family trust states, hey, you need, and it's mandatory for you to donate 5% to a charity. So we're going to donate to our own 508 trust. And so the 508 trust, you get to keep 95% of the 50,000. So that leaves you with let's say 45K. for math purposes, that's not. I don't think that really is 5%. But the point is that let's say you're able to leave. Actually, I think that is. Let's say 45K, right? That means the 508 says you have to donate also a 5%, right, to another charity. So we're going to donate that to our own charity, our own private family foundation. So we've now turned a $100,000 a year business to a now we have five to that whole 50,000. We only getting taxed on the 50,000, which of course there's other ways to get that even reduced through the LLC alone. But the point is that you now have 50,000 between your personal 508 trust and your private family foundation. That's 50,000 that you can do whatever with. Now, what's great about a 508 trust is once you donate to the trust, this remainder amount can go towards your family trust, can go towards your family, right? So let's say this 5K you donate, let's say to let's say a Red Cross or something like that. This 45K, you can now give your family grants, scholarships, whatever you want to give. Because now you know the money, how money works. Put a 2 in the chat if this is making sense so far. Put a 2 in the chat if this is making sense. Now you know how money works. And so why the 508 is so important, how this checkmates the IRS is that you are no longer needing one to apply for the IRS. Apply for the 1023 easy form. Yeah. 1023 easy form. This is normally what you would have to do if you have a 501c3 to the IRS. You no longer have to let the IRS know that you have a charity. And what does that do? That brings privacy. We all want to be private, y'all. We don't want the government to always know what we're doing. Right? We don't want the government to always know what we got going on. Right? So that's the whole point of having a private trust, is to keep your entities private, right? So you want to make sure that you have all of your entities in check. This is one reason why having a 508 trust is important. Another thing, right, is that usually when it comes to a normal, let's say you have a normal 501c3 church, you're mandatory through restrictions. You're restricted. But with the 508, you're not restricted. So what church means to the 501c3 means literally a church. But when it comes to a 508, church means whatever you want it to be. It could be a pencil. They got to make sense. But like, you define what church means. And so the whole intention here is to create privacy and not be restricted. Y'all, this is Googleable. Like, I'm telling y'all, this is things y'all can Google. Like, this is literally the exempt organization technique guide. This is from the IRS. It's on, like, if you want to look up the 508 code, you can literally go to IRC section 508. Like, it's literally a thing. For you to, it's like an introduction to private family foundations and special rules under the 508 code. This is important, y'all. If y'all want to get out from paying so much taxes to the IRS, you got to learn these codes. You got to get a 508 trust. And if you all want to learn exactly how to get this set up for you and your business, all you got to do, if you're on Instagram, all you got to do is comment the word legacy. And if you're on Facebook, Instagram and Facebook, comment the word legacy. And if you're on YouTube or LinkedIn, you want to actually click the link in the bio, in the description. Okay. If you actually want to learn exactly how to do this. Now, we're going to set this up because the whole goal here is when y'all comment the word legacy or click the link in the description, you're going to be working with me and my team. We're going to have a discussion with me, and then we're going to have a conversation on how we can help you. We're going to talk about your biggest struggles, your number one goal, and we're going to set you all up for success so you can get this situated. So as you can see, the table of contents, right, is talking about, oh, that was an accident. The table of contents is talking about, the differences between a private foundation a private foundation, and a public charity. That's the first thing we're going to click because I feel like a lot of people do not know the difference. Okay. So let's talk about the differences between the two. Okay. Let's talk about the differences real quick. Let's actually mark some things up so y'all can actually know the difference between the two. Right? So let's go. There we go. So the difference between a private foundation and a charity, okay? Private foundations must meet, oh, let me turn this on, must meet stricter requirements and are subject to more regulations than public charities. Y'all see that? That's if you get a traditional private family foundation, which is what we always aim to do. Because the thing is, the 508c1a trust is going to play as the parent company, which kind of negates some of these things. The private family foundation cannot be tax exempt, will the contributions nor will contributions to it be deducted as a charitable contribution. Underwriting instrument contains special provisions, right? Obviously, you can find that under 501c3, right? So if you're doing a charitable cause, then it will obviously be taxed. But if you're not, it cannot be considered a tax exempt, and you cannot get tax benefits from it. Okay. Here are additional restrictions, right? A private family foundations, the restrictions on self dealings with substantial contributors and other disqualified persons. Requirement that the private family foundation annually distributes income from charitable purposes for charitable purposes, meaning that the family foundation has to donate. That's pretty much what it says, right? It limits on their holdings in private business. It also the provisions that investments must be jeopardized, the carrying out of exempt purposes, and provisions to ensure that the expenditures, excuse me, further exempt purposes. Okay, this is obviously legalese code. So what this means in regular language is that when you're creating a particular trust, it has to be you have to show proof of expenses for tax purposes. If not, it will not count. That's what it's saying. In a gist, I know I'm reading this and y'all like, what the heck did this thing just say? That's pretty much what it's saying, right? Everything has to be for tax. For charity purposes. Okay, that's what it means. And if y'all want to learn this, obviously y'all can just highlight this and chat GPT this bad boy. All right. So let's talk about charities for a moment. Let me see. Oh, here's one. Here it is. 508s. Special rules for private foundations under the 508 section. Section 508 has several rules on private foundations. In addition to the exemption application required under the 508A for section of 501c3 organizations. Here are the exact several rules. The section 508 presumes that the 501c3 organization is a private foundation unless it notifies the IRS. The section 508 requires the private foundation governing instrument to observe these particular codes. I'm not going to explain what these codes are because it wouldn't make sense. The 508D disallows charitable deductions for contributions to private foundation under the certain circumstances. You cannot give any gifts by any person or by any substantial contributor. Okay, under 507A and 507D2. Okay, what does this mean? Because I'm going to explain it to you. Right. So as you see, what this means here, this here says that the 508 presumes that a section 508 organization is a private foundation. So the 508 automatically moves as a 501c3 private foundation unless it's notified otherwise. Number two, 508 requires a private foundation's governing instrument to observe what it's doing. Third one, the 508 does not allow charitable deductions for contributions to the private foundation. So if I were to donate 5,000 the to the private family foundation, that is not counted as a charitable deduction. Okay? I want y'all to understand that. I want y'all to really understand that, okay? So obviously this y'all can really go through this yourselves if y'all want to learn. And you can understand how the 508D situates things. Like we can talk about you got 508E here. We could talk you got more 508E, but if you want to learn the 508C1A, right? So we could probably look at 508C if they have it on here. So they got 501C3, but we're looking for 508C1A, right? That's the one we're looking for. So let me find it real quick because I know I saw it before. Oh, it's only doing the particular page that I selected. That's fine. Probably would have to scroll down more. Okay, so it gives me like the overall. It gives me the overall terms here. But the point is that when you really learn, y'all, the IRS code, like I highly suggest y'all just read one sentence of an IRS code once a week. I'm not even gonna say once a day. That's unrealistic. Your brain's gonna fog up. But when you understand the code, the best way to make money in this world, y'all, to build generational wealth is knowing the tax game. Is knowing the IRS code. And a lot of people are not gonna understand or fill out the IRS code. Here's a nice hack though that I always do. Download this document, upload it to ChatGPT, and ask whatever questions that you want. And it will give you the answers based off this document. So it literally solves all of your problems right there. Right? So the point is, y'all, when y'all are dealing with the 508C1A, the 508C1A is a huge hack when it comes to saving money on taxes and being able, let me go up again, and being able to build generational wealth. Because you can give grants and scholarships to your family from the deductions that you give. Put a one in the chat if this is making sense so far. Put a one in the chat if this is making sense. All right. Now, here's the different ways to implement this. And I'm going to show you this. There's something called a charitable remainder trust and a charitable lead trust. Okay. A charitable remainder trust is a legal arrangement where if you donate assets to a to a uh, to a charitable organization, right, to a charity, it can be used to support pretty much other charities. Okay, and so how it works to kind of give this to you in a and y'all are visual learners. Why are we even trying to understand this when I can just show you all what I mean? Okay, let's actually trust. Visual learners here. Remain trust. Maybe once I read. For some, a charity trans to fund the Can y'all hear me? Let's bring this back. Make sure y'all can hear me loud and clear. Can y'all hear me loud and clear? Put it two if y'all can hear me. Make sure that we good. Okay, we good. All right, cool, cool. All right, so when it comes to the trust, right? You got two types of trust. You got a charitable remainder trust and you have a charitable lead trust. Okay? So a charitable lead trust is where the assets are transferred or any income is transferred to a charitable lead trust, and the charitable lead trust generate the income generates for charity. You're pretty much giving the income from the charitable lead trust to the charity, and then the remainder of the actual assets are transferred. What a charitable lead trust is, you give some away to the charity, and then you give the remainder to the beneficiaries. And then charitable charitable remainder trust is the opposite, where you give most of it to the beneficiary, but then or you give some to the beneficiary and then you transfer the rest into the charities. You give the remainder to a charity. What we specialize and focus on is giving things to the remainder to the beneficiary. That's the intention here. Is that you want to be able to give the remainder of your wealth to a beneficiary instead of giving the remainder of your trust to the charity. Now you're always going to give things to a charity, but you want to be smart about this, right? So as you can see, the donor contributes to the remainder trust. The remainder trust gives it to the and the beneficiary. The remainder of it goes to the charity, excuse me, right? So this is probably a better example. The donor transfers assets to the charitable remainder trust. Payments, of course, this is during their lifetime, but anything left is paid towards the charity. Okay. So, like I said, a charitable lead trust is where the remainder goes to the beneficiaries. A charitable remainder trust is when the remainder goes to the charity. Okay. I would rather things go to the build more wealth. You get what I'm saying? We want to build more wealth here. Appreciate you, Martha. Like, you want to build more wealth, right? So you want to give the rest, the remainder to the charity, 100% give back, right? But give the remainder to the beneficiary so you can give your family grants, scholarships, and set them up for success, right? That's the intention. Make sure that we're recording, right? So you always want to give the remainder to the actual beneficiaries and not the remainder to the charity. Okay. So like I said, that's the biggest difference when it comes to a charitable remainder trust and a charitable lead trust. Recap: charitable lead trust goes, you transfer, of course, the assets are transferred into the charitable remainder trust. You donate some and give some while you're alive to the actual beneficiaries, and I'm sorry, this is the charitable remainder. Excuse me, charitable remainder. The assets are transferred into the trust. Some of it goes to the beneficiary, but the remainder left after the person's death goes to the charities. A charitable lead trust is the opposite. Once the assets go into the charitable trust, you give a portion of it to a charity, and then once at death, the rest of it goes towards the beneficiaries. Okay, that's how you build wealth, y'all. That's the hack. And so what we do here is we combine this method of a charitable remainder trust. Okay, remember, a charitable remainder trust. I'm sorry, a charitable lead trust. Excuse me. This is the one we use, is the charitable lead trust. We combine this, and I'm gonna make sure I put this here. We combine this and add that to the 508. Y'all, it creates a unstoppable com. Okay. Because picture you being private to report to the IRS. 5% of your assets goes to it, and then the remainder goes to the, y'all. Think about how that looks. Think about how that looks when you get 5% and then 95% to the beneficiaries and get grants, scholarships. Y'all can grant yourselves instead of having other people grant for you. Y'all got to apply for grants and scholarships when you can and scholar yourself and ship yourself. Why are we not thinking bigger? Right? And so, Charitable Lead Trust with the 508C1A, and then put those bad boys together. And that's how you honestly, at the end of the game, y'all, at the end of the game, to turn upon to check. That's how we do things, y'all. That's how we do things. I'm gonna give y'all a quick recap because I know there's some people that hopped on later and they like, what the heck are you talking about? What is this charity? What is this remainder? What is this lead? I got you. All right. So how we do things, how it works when you're checkmating the IRS, y'all, because that's the intention here, is to checkmate the IRS. What we're using in order to do that is to create something called a 508C1A faith-based organizational trust. And what this is a religious disregarded to rate as a 501c3, but not need to report as a 501c3. It's literally operating as, but you define what religion means to you. Now, it obviously has to make sense. That's like saying a reasonable salary, but you give your reasonable salary 100%. That's not reasonable. You have no business. So it's the same thing when you're in the religious. You got to define what it means over and say, yeah, religious just this extension cord. No, you define it, but it got to make sense. So a 501c1A is a faith-based organizational trust that plays as a 501, longer report to the IRS as a 501c3. You get all the privileges while being private. Okay, that's the key thing. You're private. Privacy is important. You stay as private as possible so you'll be able to move like the Rockefellers do. The Rockefellers got a foundation. Bill Gates got a foundation. All these people got a foundation, but why don't you? It don't make no sense. Why do they know what do they know that we don't? That's the crazy part. What do they know? Right? And I'm going to make sure that you're having this 508C. You're probably wondering, hey, Marcus, what does this 508 mean? Is a IRC code. Okay, there are different types. There are 508 codes and types of 508 codes. Okay, we talked about the D, the E, so many different types. I could have gone in order, but there are different types of codes when it comes to 508, and they all have to be tax exempt. Okay, is the difference between a private foundation, right? Public charity. Okay, you're probably wondering, well, Marcus, this seems like too much of a coincidence. Like, why is this one called private and this one called public? Yeah, it's there for a reason. Public charities, you can donate up to 60% a year. Private charities, you can 30% a year. But what found way, the foundation can really, because you can put this private family foundation under your 508c1A trust. You can donate 5% to this trust to your private family foundation. You have 95% of your bills here, and you have 5% of your bills family foundation. Now, let's say you have the family trust, and let's say your LLC has 100 to the family trust, and now your expenses, that leaves you with 50K. Of course, your family trust has to donate at least 5% to you. So let's say donates what's 5%? $500. $500. Of course, out of that 500, you only got to donate 5% to your private family foundation. So that's $25 in your private family foundation that you can donate as you will. You can donate as you will, right? And then this $500 stays in the 508c1A, which now this $500 you can put that back into the family trust, because we have something called a charitable lead trust in place. And like I mentioned before, the charitable lead trust states that any assets or donations, okay, any assets or donations that is donated to the charitable lead trust, automatically 5% goes to the charity, and the rest goes towards the beneficiaries, aka the family trust. And that's how we're building wealth in today's age. We're building wealth by combining IRC code, 508c1A, and we're merging that with the charitable lead trust to be able to give us max amount, because this is 95%, y'all. Max amount of tax savings, also max amount of wealth. With this is we're going to give away grants and scholarships. Now I want y'all, we can do money grants. We can even apply for grants. Even apply for grants for nonprofits. Both, we can apply for grants and still give some here. I can't make this up. I ain't make this up. This is something. This is something you can Google. So this isn't anything new, y'all. This is just information that you can implement at any point in time. Right? So if you know that you can use wealth the way you truly want to, just by under specific trust, this specific trust, the way that you, I'm sorry, this specific, the way that you will do business, merging this with a trust. We are merging these together to create the ultimate trust. And no, you can't find it ourselves. We for success. And create the provisions, create everything. Most people do either find a charitable lead trust, or you can find a 508c1. Is unheard of. Okay. So you all want to make sure, if you want to learn this information and be able to family different forms and different aspects of, try to understand, we're doing it like my grandmother said, and implement strategies in order to actually give us and pay our actual student loans. Our 50 student loans were paid for my grandmother because she was able to set this up. And like, this isn't made up, y'all. Right? So we all want to be able to implement the same teachings we have and really get the success that, right? So hopefully this helps. I really want to that can really change your life, and I want to make sure that it does. You can implement these strategies to build generation. Here on Instagram, if you're on Facebook, comment the word legacy. If you're on YouTube, if you're on LinkedIn, and I will see you all in the next video.